So if you clicked on this video, you're probably either a student or somebody working full-time who is looking to get into investment banking. Today, I'm going to lay out everything I know about the investment banking interview process from both my personal experience having recruited for investment banking as an undergrad in college, and also as an interviewer on the other side of the table when I was working in investment banking. During my time as a student, I interviewed at over 20 investment banks, and while I was working full-time as an investment banking analyst, I did numerous interviews for our summer analyst and full-time analyst program. By the way, for those of you who are new, my name's Matt. I'm a current associate at BCG, which is a management consulting firm. But prior to BCG, I also worked in investment banking, where I was specifically focused on sell-side M&A transactions. And I make these videos because I enjoy it, but also because I would have wished that somebody would have made these for me when I was younger. So the topics that we're going to cover today are, first, general interview timelines, and then the role of networking, then what bankers are actually looking for in your resume. We'll also talk about interview theory. We will also talk about the technical portion of the interview, and also we'll talk about the behavioral portion as well. And so feel free to skip around to the sections of the video that are most interesting or insightful for you. But anyways, let's get into it. So I won't spend too much time talking about general interview timelines because there's a lot of information out there already, but typically you're either entering investment banking at the analyst level, which is right out of undergrad, or you're entering at the associate level, which is after you've done your MBA. And the way investment banks like to recruit is they will typically hire a very large class of interns who will do an 8 to 12 week internship over the summer before they graduate. And then the investment bank will use that period of time as sort of an extended evaluation period where they get to see what you're really like to work with. And after that summer, they give you a full-time return offer if you've performed up to their expectations. And so this is the typical route by which they like to fill the majority of their analyst and associate classes. And so this is why there's so much focus for students on landing the junior year summer internship if you're an undergrad, because typically it's going to lead to a full-time return offer, and investment banks won't have as many spots open for people coming in full-time because they try to fill the majority of their classes through the internships. But if you're an undergrad, nowadays the recruiting cycle happens extremely early, and so you pretty much have to know as like a freshman or sophomore that you want to go into investment banking, because the earliest investment banks will start their recruiting when you are a sophomore. This year, I believe, one of the banks, I think it was maybe Guggenheim or one other investment bank on Wall Street, that started their summer analyst hiring in December of 2023, which is crazy if you think about it, because they were hiring for summer interns that would be interning in the summer of 2025, which is literally almost 2 years in advance. So before all that happens, you really need to be prepared for the interview process. And this means, preparing both behavioral and technical portions of the interview and doing networking as well. Now, if you're at a target school where investment banks come on campus to hire, this process is going to be a little bit smoother for you because you will hear well in advance when these investment banks are coming to campus. They'll hold networking and info sessions. They might do dinners with certain candidates before they do their on-campus interviews. And then it's just a matter of applying through your school's online portal. Maybe it's Handshake or some other career services platform that your school uses. And then you will just apply on there and you'll hear back pretty quickly on whether or not you got scheduled for a first round interview or not. And when that happens, it's very easy. You just go to your career center, you do your interviews, and then you hear back whether or not you move on to the super day after that. If you're at a non-target school though, which means that you don't have banks coming to your campus every day, you're gonna have to just do a little bit more networking and be just a little bit more dialed into when these processes begin. And you're gonna have to be a little bit more scrappy about how you land an interview, because you won't be going through the typical on-campus recruiting channels. Now, it is still very possible to land an offer as a non-target. And in fact, I personally have folks that I know who didn't go to target schools and are working in investment banking. And so don't be discouraged if you're currently at a non-target school. Just know that once you get into the interview room, the playing field is a lot more level. The difficulty is just getting the interview in the first place. All right, so the next thing I'm gonna talk about is the role of networking. So in theory, networking is supposed to do a couple things. The first is it's supposed to help you learn a little bit more about the role and the firm. And the second is that it is supposed to help you get a foot in the door. And what do I mean by that? Well, what you guys have to understand, especially as students, is these investment banks, even if they're larger firms, are much smaller in reality than you might think in your mind. And people talk. So for example, when I was working in investment banking, whenever we would get sent a resume to review, the first thing we would do is we would ask people around us, hey, do you know this guy? Especially if they went to the same school. Or when we got a recruiting email from a student, we would say, oh, did you get this email from this guy? Did this kid also reach out to you asking to schedule a call? And people would say, oh yeah, I talked to him. He's a really cool guy. Or they'd be like, yeah, I talked with him and he was a little bit awkward. I don't think he would be a good fit. These are actual conversations that happen. So you have to understand that your reputation is really, really important. And it's not to scare you, but it's to make you understand that networking really does have an impact, because if somebody in the room knows you and they have good things to say about you, then that can really, really help you. If they're deciding between two candidates and both candidates are just as credentialed on paper, but one of them has spoken to somebody and has come across well, demonstrates that they're likable, they have a good personality, then more likely than not, people are human. They're just going to pick the people that they want to work with. Now, a very important distinction about networking is that the ROI on networking is going to be very different depending on what school you go to, as well as what type of firm you're targeting. And I don't mean, oh, you have to go to Harvard for networking to be relevant for you and for networking to be useful. No, what I mean is, if you go to a large school versus a smaller school, the large school is advantageous in that it may have a much larger network of alumni on Wall Street that you can potentially reach out to. But if you think about it, the smaller school may also have an advantage as well, because alumni from small schools are normally much more willing to pull for current students because it's a very tight-knit and small community. And so they probably don't get as many of these outreaches, they probably don't do as many of these calls, and so when they do speak with someone that they really like from their school, they're gonna go, put out an arm and a leg for you to get an interview. Whereas if somebody who goes to like a really popular finance school like Wharton, for example, gets an email from a Wharton student, I'm not saying that that person isn't gonna help you out, but it's just going to be a little harder for you to stand out among the crowd of other Wharton students that are applying to finance roles. Now, the other thing is, depending on what type of firm you're trying to network at, if it's a smaller firm, the networking is actually going to have a bigger impact, I would say, because on average, and these are just generalizations, so take it with a grain of salt, the smaller the firm, the more informal the recruiting process, and the bigger of a role networking will play in getting you involved in that recruiting process. Whereas with a very large company, like a massive Fortune 500 company, just think about it. They have very formalized HR recruiting processes, and the say that one single employee has, especially a junior employee, on who gets to interview is much less. And so to give you an example, at some banks, especially smaller ones, the way that the recruiting process works is the team will literally sit in a conference room with a stack of resumes and go through each of them. And they'll spend maybe 5 seconds on each resume and be like, okay, we have 50 resumes. We need to take half of these out and we'll interview 25 for the first rounds. And then after that first round, maybe 10 of them will get like a second round, something like that. And so it's super informal. They're spending about 5 seconds looking through your resume, and the only thing that people are really looking at is the first and last line of your resume. The first line of your resume is usually your work experience or what school you went to. And then the last line is your interests. And some of you might be like, what the heck, man? That's crazy. How can you just reduce me to a couple lines of my resume? I wrote all these beautiful bullets under my work experience, all the impact that I had. But look, guys, I don't make these videos to sugarcoat anything to you. I'm not trying to be your career guidance counselor. I'm trying to give it to you straight, and from my personal experience, imagine if you had 100 resumes in front of you. How would you decide which resumes out of that pile to choose? You'd probably look at what school they went to. You'd probably look at what their GPA is, and then what else? Maybe their interests. If there's something interesting on their resume that sticks out to you, because honestly, at the end of the day, everybody's resume is going to look very, very similar, and there are only certain places where you can differentiate, and the interests is actually one of them. And so bankers will look for someone who also goes skiing if they're like really into skiing, or also maybe runs triathlons if they're like a big triathlete. Don't take it to heart if you don't land a first round interview, because there are so many factors at play that are highly subjective that could influence the decision-making process of whether or not you even get a shot at the goal. Okay, but anyways, let's talk about interview theory. From my experience having interviewed at a lot of investment banks, and not just investment banks, but also at consulting firms as well, I've come to realize that it's really as simple as this. There's 2 things that interviewers are looking for. The first is, can you do the actual job? Can you actually come to work and do a decent job and not have somebody have to like hold your hand the whole time? And like, are you able to just not make silly mistakes? And the second is, are you somebody that they wouldn't mind working 80 to 100 hours a week with? And the second one is actually a lot harder than you think, because with the first one, demonstrating that you can do the job, this is mostly technical knowledge, work experience, and also what I like to call poise, which is your communication skills and your perceived maturity level. Like, you have to imagine that a senior banker has to be comfortable dropping you off in a boardroom with the CEO and the CFO next to you And although you may not be the one that's speaking in that meeting, he has to know that you're not going to make a fool of yourself, and that if you are called upon to answer a question, you're going to answer confidently. On the second point, which is, oh, you wouldn't be someone that they mind working 80 hours a week in the office with, I think this really comes down to, one, are you likable? And also, do you come across as somebody who can work hard? Why? Because you're going to be held to an extremely, and although sometimes arbitrary, standards of, oh, can you remember to put a period at the end of every single footnote? Or will you remember to keep the font size the same throughout the presentation and all the colors and everything perfectly formatted? And are you going to complain if you are given an additional task on top of your already massive pile of to-dos? And so for some of my viewers, I know you guys have no trouble coming across as personable and friendly individuals. But for those of you who maybe are struggling with this aspect, I'm going to break it down to you in literal detail. So what is being likable? Well, being likable is a function of relatability. Like, can I relate to you either by my interests or what school I went to, or the activities that I enjoy doing, or even my racial and ethnic background, for example, the shared experiences that I've had. And on top of relatability, am I somebody that demonstrates humility? Am I humble? Am I willing to be coached? Do I act like a know-it-all? Or do I ask questions, and even if I know something, I try and learn something from you? Because you have to understand, as an investment banker interviewing a student, if you as a student come across as arrogant and you know more than the interviewer, even if that is true, you are shooting yourself in the foot, because they're going to be instantly turned off by that, and they're just going to reject you and move on to the next candidate who can do the job just as good as you, but is humble and willing to be coached. And so there's one term that you should remember when you go into these interviews that you want to demonstrate when it comes to this likability and hardworking attitude, and that is what I like to call humble confidence. Humble confidence is essentially the persona that you want to portray, because humble confidence demonstrates that, yes, you are humble, but you are not a pushover. And oftentimes, humble confidence goes hand in hand with working really hard, because in order to be confident, you have to be somebody that believes that they can work really hard and achieve their goals. And so another aspect of interview theory, as I mentioned, is you have to demonstrate to them that you can work hard, right? Because this is a really hard job. And it's really hard for somebody who has never really met you and can only look at what they see on a piece of paper to make an assessment about how hard you work. And so this is why people look at your school and your GPA. And even if your school and GPA isn't an accurate representation of how hard you work, it's a rough proxy that in most cases works pretty well. For example, if somebody has Yale on their resume, then yeah, maybe there is a chance that their dad is just a rich donor and they're not actually a hardworking kid, they have a trust fund, blah, blah, blah. But there's also a very high chance that they're just a kid that works really, really hard and is pretty smart. So those are the hard data points that people will look to as proxies of how qualified you are. And then there's also soft data points, which are things like how you respond to the qualitative behavioral questions, like tell me about a time that you failed and how did you bounce back, or how do you work in a team well. But all this is to say, being good at interviewing is not necessarily being good at doing the job. It's more so being good at demonstrating and portraying that you are both capable of doing the job and that you are both likable and somebody that they would not mind spending 80 hours a week in the office with. All right, so something that I think we also need to talk about is, what is the experience like being in an interview? And not just from the interviewee's perspective, but also the interviewer's perspective, right? Because most of you guys know what it's like to be the interviewee. You go into the Zoom room or on campus in your career center, you're super nervous, your hands are shaking, your heart's kind of pounding, and you're just kind of rehearsing rapidly in your head what the answers that you've practiced so many times are for each of the different interview questions. And you're thinking about your story and what you're gonna say for why you wanna work at X investment bank. And then the interviewer comes out, or somebody comes out and say, hey, Matt, and then you get up and you introduce yourself to them, and then you go to the room and you do the interview. Now, from the interviewer's perspective, this is what it's like. Let's imagine that I'm the interviewer. I'm super, super busy. I am currently on 2 live deals. My associate has been on my ass all day about an analysis that the MD asked for yesterday night. I'm sleep deprived. I have slept at 3 a.m. the last 2 nights. I'm irritable. My girlfriend's mad at me because I haven't been texting her back. And then all of a sudden, I look at my calendar and I realize that I have an interview with some random student from XYZ college in half an hour. And so what I do, I don't have any context on this person. So I click on the invite link. In my Outlook calendar, there's a resume attached to it. I pull up the resume and I'm like, oh, interesting. This kid went to Georgetown. And then I quickly skim through, I look at their interests, blah, blah, blah. And then when the interview actually happens, I get into the interview room, the kid is in there, and I give my story really quickly because, it's a formality, and then I ask them to give me their background. And within like the first 5 to 10 seconds, I can tell if this person that I'm interviewing is chill or not. Do they seem smart and hardworking? And do I like them? I think there's some psychology study that people can figure out very quickly if they like someone within like the first 5 seconds of meeting them. And so during that whole time, I'm getting like email pings and chat pings from like other people on my team asking me to do different things and asking me where XYZ assignment is, and I'm just super distracted. Now, this isn't going to be the case for every single interview, but what you have to understand sometimes is that they don't actually want to be interviewing you, and it's not a personal thing. It's just that they're so busy and they have other things that are higher priority to do that the last thing they want to do is have to be stuck in a room talking to somebody that they don't like. And so this is why it's so important to be chill and likable. And I don't mean you have to suck up to them, but be easygoing and come across as a cool, calm, collected person and not a hardo, even if you are. It's so ironic because a lot of people that get into investment banking, you have to be super hardo about like networking and preparing and interviewing in order to land the offer. But the thing is, nobody actually wants to work with a hardo. They want to work with somebody that's cool and that's relaxed and that isn't going to lose their mind if something goes south. So at the end of the day, a lot of times what a lot of decisions came down to when we had interviewed like 5 kids and only 1 or 2 could move on is we just picked the one that we found to be the most personable and had the best personality, as long as, of course, they demonstrated that they knew all the technical questions. The technical questions are like a given. If you don't get them, then you're already at a disadvantage. It's kind of like standardized testing when you're applying to colleges. Harvard isn't going to accept you because you have a 3.9 GPA. They're going to accept you because of other things like your extracurriculars. But good luck getting into Harvard if you don't have a 3.9 GPA, because you're going to have to really compensate for that in other ways, because 99% of the other candidates are going to have really good grades. It's the same thing with interviewing. If you don't pass the technical interview portion, then your chances of moving on are much lower. And I don't mean this to discourage you. This should actually encourage you, because the technicals are something that can be studied and learned and practiced, whereas something like how likable and personable you are is actually a little bit more difficult to develop. It's harder to learn because you can't just study it, and it often comes through experience. But anyways, the other thing that you should understand is how offer decisions are made. And so at least at the bank that I worked at, the way that we would do it is after we interviewed everybody, we would, on a super day, we would fill out a feedback form, which we would all send to HR. And on that feedback form, we would rate the candidate among a number of different dimensions, including how strong they were technically, how good their communication skills were, how good of like a personality fit we thought they were. And then there would also be like, you could add notes about the candidate, what you liked, disliked, and how likely you are to recommend them to work at this firm, like how likely are you to give them an offer, essentially. And everybody would rank these candidates and then give their forms to HR. HR would sort of aggregate all of the data, and then the people that came out with the highest scores were the ones that would get the offers. And the interesting thing is that the managing director's say wasn't any greater than the analysts. And so I think this actually brings up a really important point, which is that you need to be able to match the energy of each interviewer, because the way that an analyst, a first-year analyst who's just out of college, is going to interview you is going to be much different than how a senior managing director or partner of the firm is going to interview you. And the ironic thing is that you might think that a first-year analyst might be the most chill because they just got out of college and they're the most close to you. But the irony is that in most cases, the junior people are actually much more hardo about their interviewing, whereas the senior partner has nothing to lose. And so they usually just don't ask you a single technical question, and they just want to learn about you as a person. That's just a generalization, but I think it's ironic how the more junior somebody is, the more likely they are to be sort of an interview hardo, whereas the more senior somebody is, the more likely they are to ask you about really high-level things and not really dig into like the nitty-gritty details of the technicals. Now, if you're somebody who gets super nervous before all your interviews, I will tell you that I personally relate to that. I used to get super nervous, and I still continue to get really nervous before interviews. I've just learned some tips and strategies for dealing with those nerves. But really, you need to remember that nerves are just your body's reaction to what it perceives as a potential threat. But in reality, there's nothing that's really threatening you. And so I think the number one thing that you can do to calm down your nerves is just to understand that, again, it's not the end of the world if you don't get this offer. And landing a job in investment banking is, at the end of the day, just a numbers game. There are so many investment banks out there that are willing to take candidates. Every investment bank that you fail to get an offer at just builds your skills to interview better at the next firm. And so don't give up. And the other thing to remember is just treat these people like normal human beings. Don't treat them like they're some gods. I find that too many students put bankers on a pedestal. And then once those students become bankers themselves, they realize that, oh, everyone's just normal. Like, these are just normal people. They live daily lives. They're not like immune to like the pain and the struggles of this earth. And so I think just understanding not to pedestalize bankers is going to go a long way when it comes to not only making you less nervous in the interview, but also so that you talk to them more on a level playing field, as opposed to if you're some like child talking to a parent. All right, so now that I've bored you with all this interview theory, let's talk about some tactical things. There's two things that I want to talk through. The first is technical interview questions, and then the second is behavioral interview questions. Now, I'm not going to teach you how to answer the technical interview questions because I think there's plenty of content out there already that talks through the actual like tactical, oh, how do you answer $10 of depreciation, for example? And I'm not going to be teaching you guys accounting or valuation or anything in this video. But I do want to talk through what sort of topics you should really master so that you don't flop the interview. And on the technical side, it really comes down to a couple different categories. First is accounting, the second is valuation, the third is M&A, and the fourth, which is kind of optional, is LBO. And I'll talk through each. So with accounting, here you really need to understand how the three financial statements are impacted by any kind of business decision or any kind of like financial change. So for example, this is why the common question that gets asked in interviews is, how does $10 of depreciation expense impact the three financial statements? Now, some of you might be like, wait, I thought there were four. In my Accounting 101 class, I learned that there was the income statement, the balance sheet, the cash flow statement, and the statement of shareholders' equity. I hate to break it to you, but nobody gives a about the statement of shareholders' equity. And in banking, we only care about the three financial statements that are the income statement, the cash flow statement, and the balance sheet. The way you want to answer these questions is you always want to start with the income statement, and then you want to move to the cash flow statement, and you want to always end at the balance sheet and demonstrate that the balance sheet balances. So for example, how does $10 of depreciation impact the financial statements? Starting with the income statement, $10 of depreciation expense is going to lower our pre-tax income by $10, and then assuming a, let's say, 30% tax rate, that means our net income is down by $7. And so at the top of the cash flow statement, we have net income down by 7, but we need to add back $10 of depreciation expense in the operating section of the cash flow statement. So our net change in cash at the bottom of the cash flow statement is actually up 3. And so moving to our balance sheet, our cash account is up by 3, but again, depreciation expense was down by 10, so PP&E is down 10. So assets are actually down by 7. And on the right-hand side, we have our net income, which was down by 7, feeding into retained earnings, which is in shareholders' equity. So both the assets and liabilities and the shareholders' equity side are both down by 7, and so the balance sheet balances. So that's kind of how you would want to go about answering an accounting question, and really master these. You should know the basics, but also the things that people commonly mess up. And so something that, from my personal experience interviewing students, a lot of students mess up on is anything that affects net working capital. And I find a lot of students don't really understand how net working capital works and how it influences the cash flow statement. So you should know that an increase in net working capital is actually a decrease in cash flow, but a decrease in net working capital is actually an increase in cash flow. Let me give you an example. If your accounts receivable goes up, that means that you recognized revenue, but you didn't collect any cash. And so your cash flow is actually decreasing. Whereas when the accounts receivable comes down, it means that you collected cash from your customers. And so your cash flow increases. The other things that you should really know about the cash flow statement are how non-cash items impact it, and also knowing when something doesn't impact the cash flow statement. But that's enough accounting. Let's talk about valuation. So for investment banking interviews, you really just need to know the 3 methods of valuation down cold. And so you should be able to walk somebody through how a DCF works, how precedent transactions work, and how public company comparables work. And you should also know the general differences and the pros and cons of each of these methods. So to give you an example of how I would talk about the 3 valuation methods, if somebody asked me, hey, how would you value a company? I would say, well, broadly speaking, there are 2 methods of valuing a business. One is an intrinsic valuation, the other is a relative valuation. And for the relative valuation, we have the precedent transactions, which is when you look at previous deals that have been done to see what other buyers have purchased this business at. And also public company comparables, which is when you look at what the market is valuing publicly traded businesses at. Whereas on the intrinsic side, we have the DCF, our discounted cash flow analysis, which is when we project the cash flows of a business out for a certain period of time into the future, discount it back at the discount rate, and value the business at the present value of those future cash flows. And I would just stop there. Keep it very high level. A lot of students have a tendency to ramble on and on, especially when they know a lot about the technicals. But look, if somebody really wants to know more about how a DCF works or how you evaluate business, then you should just let them ask. Keep your initial answer at a relatively high level, but while still demonstrating that you understand it conceptually. And if they want to go into a particular area, then they will ask you. Because you also don't want to spit out everything you know about a DCF and then fail to answer any follow-up question afterwards. The second thing under valuation that you need to understand is enterprise value and equity value, and that whole concept of how do you get from equity value to enterprise value. And this is important because, again, as a banker, a large part of your job is facilitating the purchase and sale of businesses, and all of these businesses need to be valued in some way. And so understanding that equity value is just the market cap and your enterprise value is just your equity value plus your net debt is going to be extremely important. But moving on to the third section of technical questions, which is M&A. Here I actually think that, and this might be a hot take, but I actually don't think you need to prepare this section as much as you do the others, which are accounting and valuation, because accounting and valuation is going to be almost always asked about. M&A is not always asked about, and there's qualitative and quantitative questions related to M&A. The qualitative questions are going to be things like M&A rationale, like why would this business want to acquire another business? What are some reasons that you would want to acquire or sell another business? What are some pros and cons, things like that. Whereas the quantitative questions are going to be things like accretion and dilution questions. Like how would the price of a combined company change? Would it go up or down post-acquisition based on the current price of the buyer and the seller? Now, I would say accretion and dilution is less common than any of the other questions. I probably only got asked these types of questions in about 10 to 20% of interviews that I had in investment banking. And the reason for this is that not all investment banks even deal with publicly traded businesses, because publicly traded businesses are oftentimes the largest companies out there. And if you work in middle market investment banking, for example, where you're mostly working with privately owned, family-run businesses, you're almost never going to do an accretion dilution analysis because there just aren't any publicly traded shares to begin with. Okay, so the next thing I want to talk about is the leveraged buyout, otherwise known as the LBO. An LBO, for those of you who don't know, is a type of acquisition where typically a private equity firm will come in and purchase a business using a lot of debt. And the reason why they use debt is because debt gives you leverage and amplifies your returns. Now, investment bankers don't really put together LBO models that often. It's usually what the private equity firms and the investors are going to be doing, but understanding how they're thinking is a really important part of being good at the job. And so sometimes you will be asked questions about leveraged buyouts. And I got asked to put together what's known as a paper LBO, which is when they give you a few numbers and they ask you to come up with the IRR or the return of that business in a hypothetical LBO situation. And I got asked that in a final round interview for an investment bank as a sophomore in college, and I utterly flopped because at the time I hadn't studied LBOs. Needless to say, I did not get the offer for that bank, but after that I made sure to prepare super thoroughly. And so if somebody asks you to walk them through an LBO, the way you typically want to answer is you want to, again, keep the initial answer high level, and then they might ask any follow-up questions. And so you should just explain to them that, hey, an LBO is typically when a buyer comes in and purchases a business using a combination of debt and equity, but usually there's a lot of debt involved because debt amplifies returns. And so the plan in an LBO is usually to purchase the business, run it for a few years, use the cash flows from the business to pay down the debt over time, and then exit the investment in 5 to 10 years, hopefully at a higher valuation than you purchased it at. All you need to know is conceptually how an LBO works, why private equity firms do LBOs, and if you really want to be elite, just study up how to do a paper LBO. I wouldn't worry about learning how to actually model it out in Excel because it's quite complex, especially if you're a student. So the last thing we need to talk about is the behaviorals. And so when I say behaviorals, these are going to be things like your 2-minute story explaining who you are and why you want to do investment banking, as well as any other follow-up questions related to how you work together in a team, or your experiences working at any prior internships or being involved on campus. Anything's fair game when it comes to behaviorals. And I think the best way to prepare when it comes to behaviorals is really think through all the different experiences that you've had throughout your entire life so far. It doesn't even have to be in college. It could be before college. And really try to brainstorm all the different things that you've done and all the different experiences that you've had. After you do this exercise, you'll realize there are so many experiences that you have to draw from which you can spin a story about demonstrating leadership or demonstrating that you can operate in a team or that you're a hard worker. And with your 2-minute story, the most important thing here is to, one, keep it concise, because a lot of people ramble too much. But 2, make sure that's very structured and organized. And it should be a story, right? It's called a story. It's not a listing out everything on your resume. It should be logical, it should have a flow to it, and by the end of it, the interviewer should not be asking themselves, wait, why are you here in front of me? It should make a lot of sense as to why you're sitting in front of them in the interview seat today. And you should always end the story by explaining how you ended up here and why you're excited about their firm. One other tip that I will mention, not just related to behaviorals, but also technicals as well, is if you don't know the answer to something, just admit it and don't try to make something up, because a lot of times people can see through when you're trying to lie to them, especially because they're doing a job that you are trying to get and they clearly know way more about it than you do. And I would honestly just admit that you don't know the answer, but then also try to give a logical best guess based on what you do know. So say something like, I don't know the answer off the top of my head, but based on my intuition or based on what I've heard today, I would think X, Y, and Z. And so that demonstrates to them that, look, you're willing to admit when you don't know something, but you don't lose your cool and you are able to think logically about what the answer might be. But anyways, I hope that this video was helpful. And if you liked it, make sure to hit the like and subscribe button and let me know in the comments below any suggestions you have for future content. I'll see you guys in the next one. Peace.